Talk about
Yeah.
some some energy, man. Gail, I saw you there.
Always great to see you and Jody and everybody that all the leadership, and the leadership of integrity also. I always love hearing what they have to say. Steve Gross too. He's another one of my favorites.
Yeah, yeah. It's always interesting to hear from Steve. Jody did a great job. Jody, you did awesome.
Thank you.
We're quoting you, Jody, over and over and over again.
Uh-huh.
I like it. I like it.
Um,
Hopefully, it's something good
yeah,
to say.
I thought there were some really great things. It's like I hear a lot of comments of everybody that keeps a notebook, that keeps growing because everybody seems to come up with some new perspectives or new ideas and things you can always take away from other people and learn things. It's a constant evolution. Um, what I talk about the markets a lot on here, and I hope everybody understands. And Jody emphasizes this a lot, and so does Zach and Kimberly. That the reason I talk about this is really just to give you an overall view of what's going on in the economy and how it affects people and their lives and how we're all connected financially, how we're all connected in different ways, in their jobs and the way that we spend money and um, the way that Congress and the government interacts and creates jobs and the Federal Reserve, how they impact their job. And then, from a geopolitical perspective, I think there's a lot going on today. And so I've been doing a little research here over the last, God, when was the last time we talked? When was the last time, Kimberly or Jody,
I
when's the
think it
last time?
was before the week of Christmas Eve. So I think it's been
So it's been a while.
3, 4 weeks. Yeah.
Yeah, yeah. So for those who are on here, I'm going to give you a rare insight to something I've been doing a lot of research on. Um, I call it World War III. My father fought in World War II. He was a Marine. That was a different. They were different people back then. That was a different generation. They were tough, hard-nosed people. Um, I guess I wouldn't be here today if he didn't survive World War II, right? And maybe some of you have parents, or maybe great parents, great or grandparents that were in World War II. But World War II was a tough war. It was fought, obviously with military weapons, soldiers, tanks, airplanes. A lot of people lost their lives. Millions of people were affected across the planet. The World War I'm talking about today is being fought in a whole different landscape. It's not the kind of war that World War II was fought with. There's no tanks on the ground in this war that I'm talking about. But make no question, this is a war that's going on right now. And whoever achieves um, dominance in this war, which is being fought with artificial intelligence, and whoever develops AI first, I think is going to shape the next or control the next 100 years of global power and control. So let me kind of position who are the global powers in this struggle. So you kind of have China, right? China is I'll call them they're a communist country. So is Russia, but Russia is kind of a little bit different. But China is an authoritarian kind of model, a true communist country. And their economy is much different from the rest of the world because of the nature of how they they operate, and their government controls everything. So China is let's call China kind of its own entity itself, and they're very consumed with how they operate themselves. Then you have Russia. It's a military, let's just call them a military regime, pretty much. Russia is one of those kind of countries that kind of operates. So Russia and China are kind of, we might call them adversaries to the US. That's how we look at them. So let's just kind of position them as separate at the moment. And then next you have this Iran, Saudi Arabia, the broader Muslim kind of world community, a religious ruling power countries. And then you have the European countries. So you kind of have that centralized, Germany, England, all uh, the European entities, kind of, the EU countries there, that have formed kind of that banking system now that the euro operates in. And then you have the United States then in our allies. So what we're witnessing basically here is so this war that I'm talking about is not only about AI, but it's a contest over resources. The resources are about energy, supply chains, data, money, capital. But ultimately, it's about control. And all in the end, this whole thing is focused around AI, and that's the new battlefield I'm talking about. So let's talk about the BRICS nations, which are Brazil, Russia, India, China. So they kind of are huddled together, we might call them. And they're kind of getting aligned to challenge the US, right? So they can't, each one of them, Russia can't do it by themselves, China can't do it by themselves, but together they are very powerful. They could really do some harm to the US dollar as the world currency. So they become a threat. Also, I think that when you reality is very clear that the United States will never really trust China. I mean, it's can we really call them our partners in the economy and things like that? Well, we have to have a trade. This whole tariff thing is really kind of complicated, as you can imagine. But their long-term objective is clear, that they want world domination. They want to replace the U.S. as the world leader in all kinds of ways. So we can never really trust China. The U.S. can't. Russia, in contrast, really remains a strategic necessity for us. I think whether by alignment or containment, in some way, we've got to hope that Russia understands China's ambitions as well, that China and Russia, we don't want them to really get together. So, in my opinion, anyway, I think it's to our interest to keep Russia as an ally. And I know a lot of people, and take politics aside. So I'm not talking about politics here at all. I'm just talking about theoretically, we got to keep Russia and China not to side up against the US. Now, we've all heard about what's going on in Venezuela, right? It may be that the current US administration deserves more credit than it's probably receiving, because the Venezuela holds the largest proven oil reserves in the world. It's roughly about 300 billion barrels of what they know anyway. And that's about $17 trillion of current oil prices right now. So when you think about that's a tremendous amount of reserves. In addition, they've got about $8,000 to $10,000 of, or I'm sorry, 8,000 to 10,000 tons of unmined gold reserves. So talk about reserves. Back to that thing of what's going on here is the war. the Third World War on resources. Venezuela's got a lot of resources. So with the U.S. involvement stabilizing that country, or at least we think they're stabilizing, I don't know that stabilizing that country is even possible with what's going on there. But they removed the former leader, right? And there is some kind of control over there over the resources. So this is a geopolitical game changer. And also knowing that China now depends heavily on Venezuela oil. In fact, they buy 80 to 90% of all their oil. So we just cut them off, right? That just cut China off from a huge link to energy for China. So let that just sink in for a second of the effect of what that means. So energy is the lifeblood of AI. So that's what I want to bring back around here is, so that's the lifeblood of AI and military power too, and economic dominance. So this move was not about oil in the traditional sense, but it is about controlling the distribution of energy, particularly within the Western Hemisphere. So this raises a critical question now. Can China now move on Taiwan in a post-Venezuela world? Personally, I don't think so. I think it becomes very difficult. Without reliable energy, China now is going to struggle to sustain a prolonged military campaign to support any kind of massive power requirements needed for AI or to attack Taiwan. So they're going to have to develop a nuclear kind of solution, which they're going to take 2 to 3 years to get that up. And that's going to lead to falling behind on the AI competition, with the US. And then you got the whole chips thing, which NVIDIA is the leading chip maker right now. And a lot of chips are coming out of Taiwan. So that's one of the reasons they wanted to go after Taiwan. And now they don't have the resources of power to go after it as well. So you can kind of see how this is playing out. The move to go into Venezuela has really caught them off guard. Then there is this proposed BRICS currency. Behind the scenes, the BRICS countries have been working to try to undermine the US. So as far as the dollar's status as a world reserve currency, that effort is effectively over. I mean, that's gone now. The global financial order has shifted decisively now back into the favor of the United States. Well, I personally don't approve of, politically some of the things our president has done, but this does, I think, the move of going into Venezuela is definitely a game changer. Regardless of my personal opinion, I think that this is a clear example of America First kind of strategy, which is geopolitical implications to help our country, like him or not, whatever anybody can say. It's becoming increasingly a complex world. So, turn my phone off there. Now, let me just touch on Greenland. Everybody's probably heard the news and everybody's kind of freaking out. And, that's a sovereign country. Why could we? We're not going to make Greenland the 51st state. That's not going to happen. Our interest in Greenland is, excuse me, is more about geography, resources, and our national security. So I think what's going to happen there is there's going to be some kind of a defense arrangement or some kind of a partnership or some kind of protectorate type of thing that's going to happen just because of its closeness and its proximity, and whether we can we're going to work that out. If you think about it, we could actually come into Greenland and just give everyone there $2 million, $3 million, pick a number, $5 million. They don't have a big population. There's a huge incentive there that the US could go in and work out some kind of an arrangement with Greenland. And, this would serve the US and all of our, our country very well. The alternative is allowing Russia or China or even Europe to go in there and establish a base or some kind of influence that would be strategically unacceptable, I think. So, you got to control that entity. So then what we have there, if we control Greenland, we got the Venezuelan oil thing. We really strategically then have pretty much everything in place to really control AI, which I'm going to circle back on real quick here. And then the final thing I want to talk about is I don't know if you saw this in the news, but there's been a proposed $1.5 trillion US military budget recently, which is up from $980 billion. Now, why in the world would we have a budget that large? Well, the US obviously spends a lot of money on its military because we have a big military machine to protect our interest around the world. And I think also, we spent a lot of money in Ukraine, but Ukraine has also been a proxy war for us, where we've tested a lot of our military might over there through the different weaponry, and what we've learned, what works and what doesn't work. We've actually been able to now implement a lot of these kind of weapons. So those lessons now were applied effectively, very effectively in Venezuela. So more importantly, this budget sends a very clear message to China, Russia, the rest of the world, basically that we're prepared for anybody. And so it's more of a deterrent and I think this is going to stop any kind of a real world war that we might have. So it's a deterrent against all these other countries. And even Iran right now appears to be looking at, fearful at the U.S. and taking us very serious, because they're crippled by inflation, internal kind of instability. There's a lot of riots going on, and they're run by that, that religious Muslim kind of military regime itself. And so they're rich in resources, and China desperately needs them. So China wants to get in with them. So as you can see, this is a complicated world. The world we live in right now, and you add the financial overlay into all this, and what you do day to day becomes very, very important. And it all rolls back to AI. It all rolls back to our roles in the financial services industry. I can't emphasize enough that you need to be aware and have an educational mindset of what's going on globally, because we're all connected. All these countries that I'm talking about today, we are all connected. It's such a powerful thing happening today. I can't even tell you that we're so much better off because of what happened in Venezuela, and hopefully we can work out something with Greenland. But the U.S. now is, and I've lived abroad, I've lived in other countries, I've lived in the Middle East, and I can tell you, undoubtedly, this is the best country in the world that we live in, and the best opportunities are here. Best opportunities are in this company as well. So anyway, that I could probably go on, Jody, for another hour talking about this in a lot greater detail, but I wanted to shine a little bit of a global impact on what we do, because what you do is so important, and its relevance is broader than what you think. You're muted, Jody.
Yeah, I'm muted. Thank you. I appreciate that. I really do, because it's a very hopeful time. I think it's a very exciting time. And then it really comes down to our own personal economy. It always comes back to where we're at, how we are. I always say the difference between a recession and a depression is that a recession's when other people struggle, and a depression's when you struggle. because the way it makes you feel. And that's the way this is. You know, we all these wonderful things going on in the world. We've got to go take care of ourselves, one family at a time. One thing I wanted to reference was an article that I had just read the other day, and basically it talked about how talking about the mindset of different generations. You talked about your father, you know, and like I look at my dad and his mindset, and then I go through and I look at you know, my generation's mindset, and then so on and so forth. But there, you need to understand the different layers. You need to understand, just because you might be a baby boomer, you need to understand how Gen Z and Gen X and everybody thinks, millennials think, because it's different mindsets. And I think understanding people's mindsets is very important. So I want you to, if you would, just give you a little mindset on Gen Z, what's taking place amongst that crowd right now. And I just want to share this article, and I'm not going to read the whole thing. I'm just going to go through and read you. Well, hang on a second. I got to pull this back up. Make sure you go through and read just a couple of things on this. Let me pull this up back here. I was reading it. But if you look here in this article, it talks about Gen Z and their disillusionment. But I want you just to look right here that the average personal debt of someone that's a Gen Z, these are the young pups now. And by the way, it's funny, they're no longer just the young pups. They're almost 30 years old, the oldest of them. But their average personal debt is 94,000. That is almost as much as combined between the millennials and the Gen Xers. That's the mindset that these guys have, and they're very cynical, and they don't believe the things that you know, that they've been taught, and they aren't accepting the way things were in the past. So understand that mindset. That's what we're up against, and understand when you're sitting down with people that you need to understand their mindset. So I'm going to turn it over to Kimberly. I've got a great program lined up, and within the tools we have within Abacus, there's some tremendous tools, not just on the front end, which we focused on, but some great resource tools. So I'll turn it over to you, Kimberly.
Yeah, thank you. Thanks, Tim, and thanks, Jody. Tim, I think that, you know, everything that you're talking about is a fascinating game of chess, right? And watching what's happening around the world and who moves next and where they move. And I don't know that any of us have a crystal ball to foretell the future, but it will definitely be something that's studied for generations, I think, as far as the moves and things like that are happening right now. And then to Jody's point, I think that you know, the Gen Z specifically, based on that article, they're in a, you know, YOLO generation, right? They're like, you only live once. I'm going to the concert. I'm taking the trip. You know, I'm doing all these things. And that's the world that they live in. Let me mute my phone. That's the world that they live in, which also is you know, for our world, I think it's very scary, because when you manage your money YOLO, right? You only live once, then you're not really planning for the future. You're planning for right now. So what does that look like later? And I think that's a big conversation that we have to have with everyone. You know, as far as the Justice League mantra, you can't save the world alone, right? That's why we yell from the top of the rooftops of what we do and why it's so important to listen and pay attention. And you might not can make perfect decisions, but you can make better decisions than what you're making right now. And that's the conversation that we need to have with our clients. So today I want to show you guys, just you guys are aware of Abacus. I was looking to see if I can access it through the back office to show you how to get to that, and I can't. So one of the, or at least that I know I can, if somebody knows, they can log in and tell me. But what I'm going to show you guys is where we go. So first
You
and
can't, by the
foremost,
way. You
you
cannot.
can.
Not yet, but you will be.
Oh, okay, okay.
Yeah.
So all of you, if you don't have Abacus, can go to abacuswizard.com, which you can see here. And that's what it looks like on the front side. You just click sign in. If you don't have a registration, you can click get started and have your HGI code with you. But once you sign in, or whatever, you can register here too. Then it's going to bring you to this magical tool that Mauricio's created, which is basically like, you remember encyclopedias, right? I guess now we call it Google or Chat GPT or whatever. This is your financial toolbox. This is where you've got a lot of financial education. You obviously have the market right here. You've got mortgage rates, high yield savings rates, like all of this stuff at your fingertips. So you don't have to go look at Yahoo Finance or Google or something like that. You can plug into your back office through Abacus and just kind of have a pulse of what Tim's talking about, what's happening in the world today, if this is something that you need to know. And you can just kind of scroll through and look at this. But what I want to show you guys today on the left-hand side of the screen, I think it's very, very important that we have basic financial education. You will run into some clients that need some fancy things, but most people in middle America need the same thing, right? They need a life insurance policy to cover their family in case what if, with living benefits. They need some sort of systematic monthly savings. If we have the ability to do an IUL, that's a great option. And if they have lump sums, they need somewhere to put those lump sums, and where to align that with their goals. So it's really, really basic financial education, at least for your foundation. Once your financial foundation's in place, we can talk about crazy things, right? We can talk about fun, and Tim's on here. He's like, you can't talk about crazy things. Okay, we can't talk about crazy things, but we can do something a little different, right? Than just making sure that your bases are covered, because they already are covered. So in here, I want you to know where the tools are so you can use them to educate them. So let's say that we've taken an F&A, which stands for Financial Needs Analysis. We've gone through our clients' goals and dreams and where they are currently, and we've come back to them and we've put a plan together and we've said, we think you should make these changes, change this allocation, and this is where your money should go. And in that is an IUL. How do we explain an IUL to our client? We can definitely, pull up the illustration and use that ledger to show in real life numbers that pertain to them, which I think is definitely something we should do. But we can also just talk more in general of the concept of an IUL. How does that work? So on the left-hand side of your screen, you'll see this tab that says IUL Tools. If we click on IUL Tools, then it's going to bring up a lot of tools. The very first one is IUL Interactive, and I think it is a fantastic piece of education that you can use with your clients. And it's not something that you have to do deep dives into internal rates of return and cost analysis and anything like that at this moment. This is just general, conceptually, what is an IUL? So an indexed universal life policy, first of all, discover the benefits and the powerful benefits of an indexed universal life and how it provides security, growth potential, and flexibility for your financial future. So what is an IUL? An indexed universal life insurance policy combines life insurance protection with the potential for cash value growth tied to a market index performance while protecting against market downturns. It says exactly what it is, everything that it takes care of in that one little sentence. Just read it. You don't have to make it up, right? It's right there written out in front of you. So basically, what does that mean? Let's kind of recap what that says. We have protection. Life insurance has a death benefit to protect your loved ones. We have growth potential. The cash value inside that policy is linked to market index performance. And we have flexibility. We have adjustable premiums and access to cash value. So if something happens with a job loss and we need to reduce our premiums, we can do so. And then we can increase them back later. We can catch it up. And, if we need to borrow some money from it, we can, and we can put it back, all these different things. So when I scroll down to this next section, quick access to IUL benefits. You've got this pretty little chart that shows you that we have growth in an IUL, we have safety in an IUL, we have tax advantages in an IUL, and we have protection in an IUL. So let's look at those specific things and say, what does that mean you have growth? Awesome. I'm glad you asked. These little boxes up top are clickable. So I'm going to click on growth, and it's literally going to pull up things that help me explain how the growth in IUL works. So let's say that I have, let's look at the left-hand side of this chart. Let's say that I have a $100,000 investment and I put it in 2008. This chart's going to go from 2008 to 2017. In 2008, if I had my money in the S&P or like my 401k or something like that, you've got the S&P, you know, how much the market returned, you've got your balance on your investment account, and then what your IUL would have performed at. So in my, let's just call it a 401k, if I had a 38% loss of that 100,000 in 2008, I'm now at $61,500. If my IUL earned nothing, because if the market's down, the IUL is just a zero floor, right? I can't lose less than zero. So that's just where I stay level. Then I stay at 100,000. I don't make any money, but I haven't lost any money. So in 2009, let's look at the difference. Now the market's up 23.5%. So my 61,000 now goes to almost $76,000. Yay, awesome. I'm making my money back. My IUL, because I have a cap on it, was capped in this example at 12.5%. So now my 100,000 on the IUL side is 112,500. You can see that going every single year and how that works. So as the market goes up, obviously the market account goes up. And when you have that growth on your IUL, you lock in those gains every single year. So let's go back down to 2015, which is a negative year. It wasn't crazy negative. It was just negative less than 1%. My S&P balance, my 401k balance goes down to $142,000. On my IUL, I didn't earn anything, but I also didn't lose anything. So that $182,000 balance in there is protected. So when they talk about growth, you have the ability to track the upswings of the market, right, on that index, having those caps and protections in place. But you also have that floor to guarantee that you're never, every single year, we're going to relock those gains typically on an IUL. So that's how the growth potential in this product works. So let's look at safety, which we just talked some about. Another visual that kind of just explains what that chart showed. Here, you've got the market being the red line, going up, going down, and the indexed account being the blue line. The blue line goes up with the market, awesome. As the market goes down, my S&P or 401k or whatever, my blue line stays level, right? So I've locked in those gains. I'm just riding that down market sideways. And when the red line starts going up, meaning the market's going back up again, my indexed account goes up as well. And I can lock in those gains. Typically, it's every anniversary date, but typically that's an annual lock-in that we do in that situation. So you can see how that works with the caps and protections and guarantees as well. Now, tax advantages. Okay, explain to me tax advantages. I don't believe you. These tools are here to help you overcome objections with your clients and also just to teach them. Simply click on the box, right? When I do this, it's going to pull up IUL tax advantages and the Internal Revenue Code that goes along with that creates these rules for these products. So in the legal world on IULs, first of all, you've got Internal Revenue Code 72E, which is TEFRA. TEFRA is for tax-free growth. Under 72E, the cash value in an IUL grows tax deferred, and if the policy is properly structured, which is obviously what we teach, then loans or withdrawals can be accessed tax-free. Under Internal Revenue Code 7702, that is called DEFRA, and that is tax-free distributions. This defines the rules for a life insurance policy to maintain tax advantages if compliant withdrawals and loans from an IUL's cash value can be taken tax-free as long as the policy remains in force. Internal Revenue Code 7702B gives you tax-free living benefits and long-term care. So this section allows benefits from qualified long-term care riders on life insurance policies, like IULs, to be received tax-free as long as the insured meets chronic illness or long-term care criteria. And then finally, you've got the Internal Revenue Code 101A, which is TAMRA, and that gives you a tax-free death benefit. This section ensures that the death benefit from a life insurance policy is received income tax-free by beneficiaries as long as the policy isn't classified as a MEC. MEC stands for Modified Endowment Contract. We have safety nets on our illustration software that allows us to not illustrate a MEC, so it helps us prevent that situation. That means basically we just put too much cash value in the policy, and it made it taxable. But as long as it's properly structured, then you've got cash value growing tax deferred, access tax-free, and then the death benefit is going to pass tax-free to your beneficiaries. Number one, this is something you all should know, but if you don't, or if someone questions you, pull it up, show them, right? They can go Google Internal Revenue Code 7702 A and B. It's not something you're making up. It's literally right there in black and white for them to read, or colors if we're using this screen. So protection, how does the protection work on an IUL? So these are the protection benefits. You can see simply we've got permanent life insurance that lasts up to age 120. I think I saw one the other day that was up to 130. I need to look and see if they've increased that mortality rate. But you also have the living benefits as well. So in the permanent life insurance, you have a tax-free death benefit that will pass to your beneficiaries. Number two, you're going to avoid probate because you have made a contractual obligation inside that life insurance policy to pass to the beneficiary. It doesn't go to your estate. It doesn't go to creditors. It doesn't go to, it only goes wherever that beneficiary says that it goes. Now, if you don't designate a beneficiary, then it will go to your estate and it will go to probate and it will do all of those things. So just use the paperwork that they give you, give it to a beneficiary, and then it legalizes that inheritance. And then you also have multiple options to receive the death benefit, right? Do I want to distribute this to 20 different people? Do I want to put some in a trust? Do I want to give some to a charity? It is up to you to decide where this death benefit goes and how it passes. As for living benefits, you've got critical, chronic, long-term care, and terminal illness. Every single policy that you write might not have all of these, so you need to double check it before you say that. But conceptually, usually they at least have critical, chronic, and terminal. The long-term care piece can be a rider added on, but also the chronic mimics some long-term care benefits. But you've got all of that protection built in for you into that IUL policy. Now let's talk about cash value. If I click on the cash value, it's very easy, right? The very top, it says my premiums are flexible. That's a big deal. What if I am a commission-only salesperson and I get big commissions and then nothing, and big commissions and then nothing? Do I want to put $2,000 a month systematically away? Maybe, but I might not be able to. But I could put in $12,000 in January and $12,000 in June, right? Which still equals that $2,000 a month. I might do it that way. Or let's say I'm putting in $2,000 a month. I've had the policy for a couple of years. I lose my job. Then I can easily stop that contribution without affecting the bones of my policy. Of course, my cash value is going to be less than it was illustrated because I'm not funding it, but I have the ability to stop those premiums for a minute and then pick them back up later. So it gives you that flexibility, which gives your clients a big peace of mind. As far as, and we'll kind of go down through the center of this, you've got that big circle in the middle that says cash value. How does that work? You've got liquidity. You've got interest that you're earning. You've got tax-free classifications in this, and cash value protection. So we'll talk about the liquid first. First of all, you've got the ability to take withdrawals from this policy before you ever turn it into an income stream or anything like that. If you've got cash value there enough, you can reach in and borrow a portion of that and pay it back or not pay it back, and figure out how that affects the policy. You also have fixed and variable loans that proceeds from a loan aren't taxable, right? So you have the ability to reach in and grab that loan, and if you pay it back, awesome. If you don't pay it back, as long as your policy can sustain it, then you're still good. On that cash value, you're earning interest. We've looked at that before. You've got your market index returns, and you've also got that downside protection to protect you against that guaranteed loss. Now let's talk about tax-free. You've got after-tax contributions. So think very similarly to a Roth, right? You've got after-tax contributions. You've got tax-free accumulation. So that money is growing tax-free. And as long as you pull it out within the rules, you've got tax-free distributions. So other than that small tax, you've heard that story, do you want to pay taxes on the seed or the harvest? what's going to be smaller? Conceptually, hopefully, the seed is smaller than the harvest, right? This is the seed, right? We're paying taxes on our contribution, so we don't have to pay taxes on our distribution. And that's, you know, one of the perks of a properly structured IUL. And then you've got your cash value protection. You're protected against predators, against liens, against creditors, against lawsuits, because this is cash value in a life insurance policy. So first and foremost, it is a death benefit, not cash value. So instead of you know, other things that might be liquid out there, this gives you some cash value protection inside these policies, which is a big deal to some of your clients. So it's very easy to pull this up and literally just read it to them, show it to them, read it to them, and go through the benefits, right? Of it gives you growth, it gives you safety, it gives you tax advantages, it gives you protection. Let me show you why. And then I really like this down here at the bottom as well. So first of all, you've got IUL comparisons and fee analysis. You've got IUL versus other plans 1 and 2, which is just a continuation of comparisons. So if you pull this up, people are like, okay, that's great and all, but I'd rather do my 401k. I can do a Roth 401k. Let's look at the difference between those. And you can see these line by line. An IUL has liquidity, safety, rate of return, tax deferred, tax free, life insurance, living benefits, and leverage. If we skip over to that Roth 401k option, you don't have as much liquidity. You don't have the safety that you have on that. You do have the ability to have rates of return. You do have tax deferred growth. You do have tax free access. You don't have life insurance. You don't have living benefits, and you've got limited leverage. So look through that and compare it to what people are like, well, I would rather put all of my money in a 401k. Great. Let's look at this side by side and see what you think. Do you really still think that way? What about the bank? What about real estate? And it's going to help you overcome those objections. So if we continue to look at just that Roth 401k section in an IUL, I have unlimited contributions, but it's limited by my death benefit. So that's a little just asterisk there to remember. Penalty-free withdrawals before 59.5 is fine. I don't have free mandatory distributions and RMDs. It is tax-free to my beneficiaries. I do typically have a death benefit greater than the accumulation of my money. I can use some of this money for long-term care, and I can use this money for child's education. So if I had a Roth 401k, my contributions are limited. I cannot access it before 59.5 without paying taxes and a penalty. I don't have required minimum distributions. It is tax-free to a beneficiary. My death benefit is not greater than the money that I have in there when I die. And if my Roth 401k, whatever's in there is what my family gets. That's it, right? I don't have any money for long-term care, and I can't use it for my kids' education specifically. So it just kind of gives you some check marks and tells you, let's compare these side by side and look at them. If we talk about an IUL versus managed money, because these are conversations people are going to have with you, IULs have fees, right? They have life insurance costs and internal fees. Managed money has fees, right? It's not life insurance costs, but it is fees. So let's look at the managed money side on the left. It's a growing fee structure. So if I have $100,000 in my investment account, I'm paying 1.5% on $100,000. If that money grows to $1 million, I'm paying 1.5% on $1 million. So on an investment account, my actual expenses are increasing as the value of my account goes up. So if you look at that inverse triangle, if we start at the bottom, on an investment account, I'm going to typically pay the smallest amount of fees in the beginning because hopefully my money is growing, therefore my expenses are growing. But I'm paying for investment advice. So if, you know, I'm paying 1.5% and I'm making 12, great, awesome, right? In the absence of value, cost is an issue. It's a great option, but how does that work compared to an IUL? So an IUL has a decreasing fee structure. It's typically still going to be about 1.5% of the account, but it decreases over time. So if you look at the bottom of that triangle on an IUL, it's a front-loaded cost that's going to decline over time. What does that mean? That means if you look in the first 10, 12 years of an IUL policy, your cash value and your surrender value are pretty different, right? And then once the surrenders fall off and some of those fees fall out, then it becomes a really great investment. But it's not a short-term strategy because of those front-loaded costs. But as your cash value grows on an IUL and that death benefit kind of stays the same, like let's say this is my death benefit, this is my cash value. As that grows, I hope you guys can see my hands, and kind of reaches closer to the top of that at the end, you're only paying for the death benefit in that corridor, right? You're basically self-insuring for the difference. So in an IUL strategy, your fees are expensive up front and they reduce over time. So conceptually, it's very, very similar, and fees, you know, are going to be similar between those two, and that's the difference in how they work. But it helps you explain that to your clients. And then finally, you've got all of these different options down here at the bottom. So you've got a CD versus an IUL. Okay, that sounds great and all. I don't want life insurance. I'm just going to keep my money in a CD. Okay, fine. Let's compare those. An IUL is going to have higher growth potential with market upside. It's going to have tax-free growth and access. It's got no early withdrawal penalties as long as you don't collapse the policy, right? And you borrow from it what you can. It's got life insurance protection included. It's got inflation protection via market participation. A certificate of deposit has guaranteed fixed returns, but typically smaller, right? It's simple and predictable. It's got low returns that are currently 3 to 5%. Everything that you earn on that is taxable as interest. And typically you've got early withdrawal penalties. Go back to the IULs. You will have early withdrawal penalties if you withdraw early. You do have surrender penalties on an IUL. But bottom line, the IUL provides significantly higher growth potential than CDs while maintaining that downside protection and adding valuable life insurance coverage and protection for you. If we want to look at real estate versus an IUL, it's here, right? And the IUL advantages: no maintenance or management required compared to real estate, high liquidity via policy loans, market protection with guaranteed floor, no property taxes or insurance costs. Death benefit protection is included versus a real estate investment. Rental income potential you have. Tax depreciation benefits are a bonus. It does require active management. It does have low liquidity because till you sell that property or refinance it, you can't access the money in it. And it does have market and tenant risks, right? If the real estate market is down, you can't get your money back out of it. If your tenant screws up your house, you got to pay to get it fixed. IUL offers real estate-like growth potential with superior liquidity, no maintenance cost, and built-in life insurance protection. So ultimately, all of these tools are here at your fingertips. You can click through and explain it to your clients as they have questions, or you can just use it to educate yourself so when they have questions, you can answer it without having to pull this up. Either way is fine, but don't make it up. Right? You've got these tools at your fingertips, so pull it up and look at it and read it to them if you have to. That's what it's here for. It's here to educate you and to educate your clients. So ultimately, the key advantages of your IUL: tax-free growth. You've got tax advantages. You've got cash values growing tax deferred and can be accessed tax-free through policy loans. You've got downside protection, like a 0% floor, and you're protected from market losses with a guaranteed 0% floor while participating in upside growth. And then you have ultimate flexibility as well. It is adaptable. Life is adaptable. Nobody knows what tomorrow's going to bring. So if we need to make changes, we need to have the ability to make changes. It's got adjustable premiums, death benefits, and access to options that adapt to your changing life. So I think it's important to know that these are at your fingertips. Again, log into Abacus, go over here to IUL Tools, click on the very first one, and it's going to pull this up for you. So I think it's a great tool to explain how IULs work to your clients. Do any of you guys have any questions? I'll stop my share and see if anybody has any questions today before we let Jody close us out. Awesome. You've been trained. You guys are wizards now, right? So you should be able to go out and duplicate it all. And good news is you don't have to recreate it. You can duplicate it because it is at your fingertips, and you literally have to pull it up, click the buttons, and read it to your clients, and they can read it with you. And a lot of times something like that just reiterates what you've already told them, but with them seeing it in print from a third party, not just you and your words, it gives them that, third party credibility as well. Jody, I don't know if you can hear me, if you're around, if you're available.
Oh yeah, I'm here. I can definitely hear you. And I listen to every word. I was just going to say, guys, that I wish I could somehow let you understand that you're driving a incredible sports car down a 4-lane highway compared to anything we've ever had before. I mean, when people look for training, it's always what people clamor for. It's always, presentations, all those things. Well, we have it. We have every single thing in place. I mean, it's just kind of the next evolution of presentations we've had before. Zach's famous brother A, brother B, unqualified me. All those things combined are all just right here. And it really is the biggest part we love about this is the duplication factor, the confidence factor. That's the biggest part of this, is that you now can know that you can go full speed. Number one, call on any client. And then number two, you can go recruit anybody, knowing they can be trained by going in and just reading the things that she just went through. And it takes what it takes. It's taken us, 10, 20 years to be able to articulate. You really could have it at your fingertips from day one, but it's only as good as what we do it. It's a tool. A tool does not work. Theoretically, with all the tools we have with technology, we should be saving time to where we only have to work 2 hours a day and be 10 times efficient and be in shape better than ever before. And it just doesn't work that way because we have all these tools around us. We have to go use them. And that's one thing I would encourage you is we've really been looking at what we need to be doing on Wednesdays. We want to be effective. We want to have this meeting to be effective. And that only works is that we've got to be immediate implementers, meaning that what you just saw, if you don't go use it and show it to 5 people in the next 24 to 48 hours, then we failed. And it will do you no good. So I am challenging every single one of you to go take what you just saw, to go act on it, to go show it to potential clients today and tomorrow and come back and give us reports on that. That's what we want to have happen off this.
I think that starts with going to abacuswizard.com and making sure you have an account and knowing where to click and knowing how to do that. Like, it starts with you actually touching it and feeling it. So when you are with a client, then you know what you're talking about. You know where to get to it.
And it literally is point and click. You go to those matter of fact, go back to that page where it's the puzzle pieces, a little jigsaw, little piece at the top. And once you go to that page, guys, all you do is touch each one of those pieces and it takes you right to whatever you want. That's it. You touch any of those 4 quadrants and it takes you right to that. Seriously, go show that to your family. Go show it to your kids. Go show it to your spouse. Practice on them and then get out and have a leap of faith. I remember the first time that I ever saw a laptop. Tom Matthews was in front of the room and he showed what was called Morningstar, which was listen, I thought Morningstar was the greatest thing I had ever seen. And this is 100 times better than that. And that cost us. But I'm telling you, I knew then, I said, oh my gosh, all I've got to do is show people this. All I got to do is go show people what I just saw. And so now this is that for you for free. Now, listen, I don't know how long it'll ever be free. I just know it's free right now. Let's go with it. We've got all these amazing tools and let's go use them. So great stuff. Thank you, Kimberly. Fantastic. It's
Yeah, you're welcome. See you guys.
Great day, guys. See ya.